It's a beautiful sunny day here in Bend, Oregon, and we're here to discuss real estate. Let's start with a number, 99. 99% of homeowners that have homes right now have interest rates less than what they're at right now in the market. A lot of sellers don't want to sell because they have these locked-in monthly payments from these low interest rates that we saw in 20, 21, and 22. And it's not allowing a lot of inventory to come on in the market. Let's say you were a homeowner that bought a $750,000 home with a $500,000 mortgage 2 years ago at 3%. What's your monthly payment? Well, it was about $2,100. Right now we stand at about 7%. What is that? $3,600. That's about a 70% increase in your monthly payment, even if you bought the same price home as you did 2 years ago. And that's causing illiquidity and a lack of turnover in the market. What is that doing? Well, there's very little inventory for sale. This has had a lot of effects from pricing to buyer activity over the last number of years. So where are we at in inventory? Well, in general, we're up about 30% in inventory year over year. A lot of buyers are saying the inventory is increasing. I'm going to wait for prices to come down. Well, we're not really seeing that. If you dig deeper into the details and look at single family homes only, we're at about 754 homes available on the market right now. This time last year, 750. So we're not seeing that big increase. And even if we look at the overall market and say, hey, we're up 30%, we're still about half of the inventory that we've had for the last 10 years here in Bend. Right now, the average price of property in Bend is $831,000. It's an uncomfortably high price, and if we talk for single-family residences only, it's north of $900,000. It's very uncomfortable and it's very tough for buyers to buy in this market with the combination of the high housing prices and the high interest rates. A lot of people have been sitting on the proverbial fence waiting for some clarity on how to act. But we at the Lad Group have found over not only months and years, but decades of advising clients that it's all about time in market, not market timing. The good thing is that inventory is increasing a little bit, you have a little bit more negotiating power, and you have time to make a planned decision. Yes, interest rates are high, but if you can't afford these interest rates, there is a little bit of a saying out there that's saying, date the rate and marry the house. What does that mean? It means if you can afford today's rate, you're going to have more negotiating power with these sellers right now. And if you have to refinance in the coming years as interest rates come down, hopefully, most experts are predicting that, you have a hand up on people that cannot purchase in this market. While inventory is up a little bit, it's still low by historical standards. And if you have a well-priced, well-positioned, well-marketed home, success can be found. That said, buyers are a little more emboldened with that rising inventory. They have time to make wiser decisions, and overpriced homes are suffering in this market. Real estate is best done when it's done with a plan, when it's done with knowledge, and it's done with an expert at your side that has your best interest at heart. We at the Lad Group are proud to be leaders in this industry, and we look forward to serving you for years to come.